This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Stocks routed. Wall Street ends the month in ugly fashion. The Dow having its worst day since February, early February, down more than 300 points.
France on line one. T-Mobile shares jump as a French cell phone company bids $15 billion for the U.S. business of T-Mobile.
And a surprise call.
Trey, meet Warren Buffett.
Yeah, I want to give him $50,000. That's better than $70,000 for me.
Find out what happens when a 17-year-old recovering cancer patient and a Wall Street wannabe connects with the world's most famous investor. All that and more for Thursday, July 31st. And good evening, everyone. I'm Sue Herrera, in tonight for Susie Garrett.
And I'm Tyler Matheson. Welcome from me as well. Remember those stock market records from a couple of weeks ago? Well, you can forget about them for now. Today, stocks had their worst session in months, almost 6 months to be exact for the Dow Jones Industrials. It fell 317 points to finish at 16,563. NASDAQ slumped 93 to 4369, and the S&P 500 dropped 39 points to 1930. And change. All 10 S&P 500 sectors were lower today. All 30 Dow components lost money too. Now look at this graphic to see how far the major indexes have slid since their peak just a few days ago. Small company shares have suffered the most. The Russell 2000 is off almost 8%. And if the indexes weren't negative already for July, today's losses made them so. The monthly drop for the Dow and the S&P was the first since January. For the Russell, the worst since May of 2012. Here's Bob Pisani.
It was an ugly start and an ugly close for the day. There were several reasons for the drop in the markets. First, it started in Europe. Portugal's biggest bank reported a multi-billion-dollar loss much greater than expected. Second, the rhetoric in the Ukraine is heating up, with the prime minister there saying Russia was seeking to revise the outcome of World War II by annexing the Ukraine and fomenting war. Then Argentina defaulting on its debt put pressure on Latin American stocks and other emerging markets. Then interest rates in the U.S. spiked when a gauge of employment costs came in much higher than expected. That had many worried that it may cause the Fed to hike rates sooner rather than later. Finally, we had a number of big companies with disappointing earnings or guidance, including shoe manufacturer Adidas, which has had considerable sales in Russia, and home builders Ryland and Beazer, both of whom reported disappointing earnings. Now, we get the July jobs report tomorrow. Traders want to see clear signs that the job market improvement is continuing. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And joining us now to talk more about today's sell-off and what it means for you and your investments, Art Hogan joins us. And of course, he's a market specialist and he is with Wunderlich Securities. Good to see you, Art. What do you make of what happened today? I mean, does it change the overall bull trend that you have been predicting and have been right on so far?
No, I don't think it does, Sue. I think it's helpful to, take everything that Bob just went through and aggregate it. And I think what really happened today was we got some physical evidence of what we've been concerned about on the global macro. And by that, I mean all of these things, Russia, Ukraine, the Gaza, Israel, geopolitical hotspots around the world, are emotional events. But when we actually get physical evidence, whether it was the deflationary economic report out of the Eurozone today, or Adidas and InBev and Exxon Mobile, all talking about a slowdown in demand because of what's going on in Russia. And I think that's why the market manifested itself in a sell-off today. And oh, by the way, this is a sell-off that's been a long time coming. I think we've gone a considerable period of time without much volatility whatsoever. So I think this is the garden variety sell-off that we're going to see. We're down 3% on the S&P. I don't think we get down much more than that. We closed on support. We'll see what tomorrow brings.
All right, let's bring in John Stolfus. He's Chief Market Strategist with Oppenheimer and Company. John, welcome.
Thanks, Tyler.
What happened today? Was it a hiccup or something more?
Tyler, I'd have to say I think it was a little bit more than a hiccup. It was a confluence of things from around the globe that have already been mentioned. We'd add to everything when you consider the impact of just a potential speed bump with Argentina. We've been through this before with Argentina over the years, but it all leads to a good opportunity to take profits. It hasn't been a bad year on the back of 2013 when we were up about 30. So we would have to think that at this juncture, a little bit of selling, and we've been here before. In February, we had a spike in the VIX. We had a pullback, concerns about growth, but we are in the process of an economic expansion coming out of an economic recovery that has been significant.
You know, so Art, in the past, as John just pointed out, we've had these hiccups, or in some cases, more of a sell-off, and the lesson to be learned from those was that you should have bought. Do you feel the same way with today?
I do, Sue, and that opportunity might not represent itself tomorrow. It's a Friday, it's the summertime. We've just had one of the worst days we've seen in 6 months. But I think as next week begins and we start to see the dust settle a bit, you're going to realize that when these things happen, realize the market was down pretty much across the board, almost the exact same percentage point, and nobody was running to gold, and bonds weren't acting funny. So you've got a market that basically was risk off. Every indice seemed to be down about 2%. That creates bargains. You want to get at your shopping list and look at what stocks have been sort of tarnished with the same brush that everything else was sold with, and look at the stocks that you've been waiting to buy, but have gotten ahead of you. So I think those opportunities probably come, and they probably come as early as next week. I think tomorrow might be another day to wait and see. It's very difficult on a Friday in the summertime after a very difficult day like we had today.
John, if this turns out to be a buying opportunity for equities, what would be on your buy list?
Tyler, I would be looking to add technology, industrials, materials, and select items in consumer discretionary.
Tell me about consumer discretionary, because we've had some bumpy results out of the consumer sector. What are you driving at there? What kinds? If you don't want to name names, go ahead. I invite you to. But if you can't, what kinds of companies are you pointing to?
Well, I'd be glad to mention a few names. Companies like Home Depot and Tiffany's would be among those that we'd want to buy. Sort of a barbell there: home renovation, and on the other end, quality jewelry, both at affordable end as well as the expensive end. And on a global basis for Tiffany and, of course, Home Depot, it's a U.S. story. We would also consider here within the consumer discretionary arena, we'd want to be still exposed to automobiles. Average age of the automobile fleet remains stuck at around 11 years, and people are going to continue buying cars.
All right, we'll leave it at that. All right. Home improvement and Tiffany's. You can wear good jewelry as you repair your home. Thank you, guys.
You get me the
Appreciate it.
hammer, I'll get you the rings.
There you go. All right, Art, John, thank you. Ty?
The biggest loser on the Dow today, Exxon Mobile. Even though the world's largest publicly traded oil company posted second quarter earnings that beat expectations, but its shares fell 4% because its production dropped to the lowest level since 2009, just under 4 million barrels a day. But don't cry for Exxon. Save that for defaulting Argentina. Exxon still managed to earn nearly $9 billion in the quarter, $9 billion in 3 months, and its revenue, $111 billion.
The French low-cost telecommunications company Iliad confirms it made a $15 billion cash offer for more than half of T-Mobile today. Meantime, T-Mobile has turned its first net profit in a year and signed up another 1.5 million customers. Morgan Brennan has more on what this all means.
America's fourth largest wireless provider has been shaking up the industry, aggressively slashing prices to spark competition with larger U.S. rivals Sprint, AT&T, and Verizon. So far, the plan seems to be working. T-Mobile continues to add monthly wireless subscribers, and now it's attracting potential buyers.
We've always said in the long term, scale is extremely important. But I point out that we have multiple options to create long-term scale for this company, one of which has been long rumored and, is one possibility.
Multiple options is right. While it's been widely believed that Sprint could put a bid in for T-Mobile, another company has beaten it to the punch. Today, a French telecom upstart called Iliad confirmed its $15 billion offer for a majority stake, sending shares of T-Mobile higher, even as the broader market sold off.
Experts say such a deal could face fewer regulatory hurdles, since it would maintain the current number of wireless carriers. But it also strikes right at the center of a heated price war that's redefining the U.S. wireless space. Experts say a deal like this could be good for consumers, since a Sprint-T-Mobile merger would have potentially decreased that competition.
AT&T and Verizon, paradoxically, would have benefited if Sprint and T-Mobile merged, because you'd see 4 players going to 3, and the presumption was from investors that that would mean higher prices for consumers and therefore more profitability for the wireless carriers. And so simply the fact that those stocks are going down in a funny way, confirms exactly what the concern of the regulators was all along, that it would lead to higher consumer prices.
But what about Sprint? The country's third largest carrier has been pouring billions of dollars into network upgrades, losing monthly subscribers for the past 2.5 years. While those upgrades are expected to be completed this year, analysts say it would need more scale to better compete for customers. A potential deal with T-Mobile could have provided that. Still, this is only the beginning. T-Mobile has confirmed Iliad's bid but declines to comment, making it unclear whether the offer is viable. And Sprint could still counter. And then, any deal struck would still have to get government approval. For Nightly Business Report, I'm Morgan Brennan.
Shares of T-Mobile were higher, but all of the other major telecom companies fell on the news.
And coming up, Under Armour's new strategy, what the sportswear company is betting big on to fuel growth. House Republican leaders have canceled a vote on a $659 million bill to improve security at the U.S.-Mexico border and have not adjourned as they had planned. They did so because of divisions within the party and a lack of support from Democrats. It's unclear what Congress is going to do now, if anything, to deal with the tens of thousands of Central American immigrants, mostly children, who are coming into this country illegally. Speaker John Boehner does say that the House will continue to seek solutions to the crisis.
Congressman Paul Ryan's bold budget-cutting proposals have impressed Republicans but haven't passed Congress. And now his new anti-poverty plan doesn't cut a dime. Our John Harwood asked him why and whether Congress will get anything done in the next 2 years.
I didn't want to get into a debate about proper funding levels of the status quo because we would spend all this time talking about budget numbers. I wanted to start a debate about how to reform the status quo. The fact of the matter is these reforms could occur at any spending level. You can decide later on.
But two objections that I've heard. One, I talked to Hillary Clinton last week. She said this is not a good idea because if governors won't take federal money, free money, to expand Medicaid, they can't be trusted to protect these programs, A. And B, that you eliminate the automatic stabilizer function of these programs that allows them to expand when the economy is worse.
Yeah, so I'll take the last one first. The baseline of funding changes per the economy, and I would anticipate doing the same thing here with what you call automatic stabilizers. The first point, though, I just disagree with. This isn't free money. States are getting put on the hook with Obamacare, and then the federal government ratchets down its matching rate. So it is an unfunded mandate at the end of the day. But more importantly, it's sort of an apples to oranges comparison. It's not the same thing for a governor to say, I don't want to take this top-down, heavy-handed approach from Washington of a government-run healthcare system. There's nothing inconsistent with the governor saying no to that and then saying yes to, I want more flexibility for how to customize benefits to get people from welfare to work. So I just don't see that as an accurate comparison.
Isn't the actual reason that you haven't passed in the House freestanding entitlement reform that even though you're willing to do it, your colleagues are not?
No, I don't think that's it. I think we know that the Senate won't act on these things, and we're trying to pass a lot of bills that we think have a chance, a reasonable chance of passing into law to make a difference in people's lives. I think if we had willing partners on the other side of the aisle, if we had a president who was actually willing to tackle our tough fiscal issues, our members in the House would be more than willing to participate in that. But it's been abundantly clear to us that the Senate and the White House is not interested in tackling the really big problems facing our country fiscally.
If the Republicans take the Senate in midterms this fall, what changes in the next 2 years? Anything?
I think if we were to attain the Senate, we would actually have the ability of passing legislation all the way through Congress, not just half the way through Congress, and giving the president the opportunity to make a decision whether or not to support the legislation.
But shouldn't the message for the conclusion that average Americans should draw is that there's really nothing that's going to happen until we have a new president, whether it's one party or the other?
I hate to think like that. Unfortunately, I think there's some merit to that criticism.
Let's bring John Harwood into the conversation now. John, a couple of things. First of all, did he comment at all on tax inversions, where U.S. corporations have been increasingly locating overseas to get the lower tax rate?
He did, Sue, but he said that that could only happen in the context of comprehensive tax reform. It wouldn't be effective if you try to do it as a single rifle shot proposal. And he said the broader tax reform is also one of those big issues that can't get dealt with by Congress until we have a new president.
John, do I understand correctly that Congressman Ryan is going to move from the chairmanship of the Budget Committee to the chairmanship of Ways and Means, which is the principal tax writing committee? Does that mean that his focus in the next Congress is going to be on tax reform?
Appears that way. Paul Ryan is considering and told me he's keeping his options open about potentially running for president, but he is in line to become Ways and Means chair. And if I asked, when I asked him whether he'd rather do that job than run for president, he said, I like the path I'm on in the House. So I think he is going to stay there, focus on tax reform and entitlement reform, and we'll see whether he can get anything done.
You know, we're coming up on that August recess, John, and there's some pending legislation that we mentioned earlier, the immigration reform, et cetera. Where do the House and the Senate stand in terms of taking the recess or not?
They are going to take the recess. The House is going to be in tomorrow. The Senate plans to finish its votes tonight. They'll pass the VA bill, pass the House version of the highway bill. Looks like nothing will happen on the border crisis.
Thanks, John. As always, John Harwood in Washington.
Synchrony Financial makes its trading debut in the biggest initial public offering so far this year. They did it on a bad day. That's where we begin tonight's market focus. The credit card company, which was spun off from General Electric, raised nearly $3 billion in the offering. It sold 125 million shares, $23 apiece. That was at the low end of the expected pricing range. Shares flat, $23, right there. Tesla Motors posted after the bell earnings that easily topped estimates. The electric car maker's sales of its Model S matched estimates as it began deliveries to China. Separately, Panasonic announced earlier today that it will invest in Tesla's battery manufacturing plant. After the bell, shares were volatile. During the regular session, the stock was down 2.5% to $223.30. Newly public GoPro also out with late earnings. They reported a wider quarterly loss as costs nearly doubled, but the action camera maker's results actually beat estimates. Still, shares way down right after the report. During regular trading, the stock on this down day was 3.5% higher at $47.97. Wave of media earnings to tell you about. Time Warner Cable posted earnings and revenue that came in shy of estimates as its core video business continues to struggle. DirecTV, on the other hand, better than expected results on the top and bottom line, stronger ad revenue. Discovery Communications also had results that beat the consensus, and shares of Time Warner and DirecTV were down. Discovery was higher. Trulia's second quarter loss widened as the online real estate company's rising costs outpaced revenue growth. Despite that, its results were better than forecast. Shares popped initially after the report. During the regular trading day, the stock down 3% or so, $60.53.
Well, it was a soggy trading day for cereal maker Kellogg. The company reported its fifth straight quarterly decline in cereal sales, and it cut its full-year profit and sales forecast as demand continues to fall in the U.S. Shares tumbled 6% to $59.83. Colgate-Palmolive saw its profit rise in its second quarter as it was helped by increased unit sales and pricing. Revenue came in slightly short of estimates, and the company reaffirmed its guidance for the full year. Shares dropped nonetheless 4% to $63.40. And MasterCard's second quarter net income climbed as the company was helped by volume growth and by an increase in consumer spending. Despite that, the company's CEO was cautious about the U.S. economic recovery. The stock fell 2% to $74.15. And Target is bringing in an outsider as its CEO for the first time as it fights to redefine itself. Brian Cornell was an executive with PepsiCo. He replaces interim CEO John Mulligan, who is Target's chief financial officer. Cornell will lead the effort to help the retailer recover from its massive data breach. Shares were off almost 3% to $59.59.
Another retailer in the midst of a strategic rethinking, Under Armour. The Maryland company has traditionally focused on men's activewear, and now it's trying to win over women. Here's Sarah Eisen.
Under Armour is making a big bet on women. The fast-growing sportswear company launching a major marketing campaign in New York centered around ballerina Misty Copeland. Not exactly what you'd expect from a company that's fueled growth by selling compression T-shirts and other men's performance apparel created by former college football player and CEO Kevin Plank.
This transition from Under Armour just being about the female athlete to being a story about the athletic female. Don't just think about us as sport bras and compression shorts. There's much more style. Style is cool and style is incredibly important.
The women's active wear market is about $15 billion according to NPD Group, and that's grown 8% from this time last year. Under Armour at this point only has a tiny slice of that market, but says it could grow to $1 billion business and even be bigger than its men's business. Major players include Lululemon, Nike, and Gap's Athleta. But Plank isn't worried about the competition.
I don't think anyone else controls the destiny of Under Armour. Is that we've got this opportunity to build really a great business. I don't know about size, but something where, you know, our women's business, frankly, has been outpacing the growth since our IPO in 2005.
For men and women, sports apparel has been booming, growing 4 times as fast as the overall apparel industry. That's certainly helped Under Armour sales explode, on track to grow 29% this year to $3 billion. Its stock up more than 60% this year, more than 10 times the broader gain of the S&P 500. No question Under Armour has the momentum, but to catch up with Nike, it's going to have to grow, and it's going to have to grow internationally. Nike still has 9 times total sales. For Kevin Plank, the CEO, that means focusing on the growth spots, international footwear and women's, even at the start of football season. For Nightly Business Report, I'm Sarah Eisen.
Coming up, the teen who has Wall Street ambitions and got some pearls of wisdom from none other than Warren Buffett. That's next. A judge has ruled against Microsoft, saying U.S. law enforcement can force the company to turn over emails that it stores in Ireland. The federal judge in New York ruled today after hearing oral arguments, but she agreed to stay the effect of her ruling to give the company time to appeal. Microsoft has said that rulings forcing it to turn over emails threaten to rewrite the Constitution's protection against illegal search and seizure. Its arguments were joined by Apple, AT&T, Cisco Systems, and Verizon.
Sometimes wishes do come true, and this week, thanks to the Make-A-Wish Foundation, one did for 17-year-old Trey Grinner of Alamo, California. Trey wants to be an investment banker, maybe a money manager. Last Christmas Eve, he was diagnosed with Hodgkin's lymphoma. A social worker at the hospital where he was treated hooked him up with Make-A-Wish. It arranged for him to do a week-long internship in New York City with Goldman Sachs. He's hung with Lloyd Blankfein, rung the opening bell at NASDAQ, and met Derek Jeter on the field at the stadium. And today, he had perhaps his biggest thrill of all during an appearance on CNBC. We surprised him with a phone call from Warren Buffett.
I understand that you're being shown around Goldman, and I'd like you to have me become your agent, because they're going to try and sign you up, and I think that the two of us working together could make a better deal with Lloyd than if he has you all to himself, because we can get Jamie Dimon into the act and have everybody competing for your services if we play this right.
How, Mr. Buffett, would you counsel ordinary investors or a guy like Trey, who's out there trying to make some money in his personal portfolio, to factor in all of the various cross currents that we hear in the market on a day like this? The idea that wage inflation is coming back. Argentina is defaulting on its debt. There's increased tension in Europe, and the European economy may not be good. How should people think about that on a day like this, where they see a very immediate effect in the prices of their stocks?
Yeah, well, if they're in a good business and they've got some spare money and they like buying it yesterday, they should like buying it better today. It really, the day-to-day stuff doesn't make any difference, and the trick in investing is to buy good businesses and hold them for a long time and make a lot of money doing so. And it's a mistake to pay attention to the day-to-day fluctuations. If you found a good business in your hometown to buy into it as a private business, you wouldn't think about buying and selling it every day just based on headlines. You'd concentrate on buying the best business you could and having the best management there that you could have.
If you liked it yesterday, you might want to buy even more of it today. Mr. Buffett, thank you so much. Trey, any final words or questions for Warren?
Well, I think your advice is really good on buying the retracement. If you liked it then, you're going to love it now. And Dow's down, and I think it's a good time to re-up on positions.
Trey, we'd love to have you come out to the Berkshire Hathaway annual meeting, too. I'd like to meet you personally.
Sorry,
I bet we can make that happen, Mr. Buffett. Thank you so much. Trey told me he's feeling well. He had his last chemo treatment a month or so ago. His recovery is on track, and next for him will be classes at a community college out in California, then maybe Cal Berkeley. And his escort from old Goldman promised to make another wish come true next year, going to that Berkshire Hathaway powwow in Omaha and meeting with Warren Buffett. He was a very impressive fellow, as I know you know.
He really was. Makes me kind of misty, though.
Yeah.
He really does. It's a very heartfelt story, and we wish him all the best of luck.
And he's had a hard way up and
he
is
has.
battling his illness very effectively.
But he's feeling good.
Nice of
All right.
Mr. Buffett to call in. We appreciate that.
We do, very much so. That'll do it for us on Nightly Business Report. I'm Sue Herrera in for Susie Guerra. Thanks for joining us.
And I'm Tyler Mathisen. Thanks from me as well. Have a great night, everybody. We'll see you here tomorrow night. I'm Tyler Mathisen with a Nightly Business Report news brief. Stocks fell about 2% today on mounting worries over Argentina's default, ongoing tensions with Russia, and a jump in U.S. labor costs that prompted concerns about corporate margins and inflation. The Dow plunged 317 to 16,563. NASDAQ off 93. S&P down 39. The slide put the major indexes into the red for July, first monthly loss for Dow and S&P since January. Exxon Mobile was the biggest drag on the Dow. Its second quarter earnings beat expectations, but its shares fell more than 4% because production was at the lowest since 2009. And the French low-cost telecom company Iliad made a $15 billion cash offer for a majority stake in T-Mobile. Be sure to tune in to Nightly Business Report here on your public television station.